In my mind, I'm gone to Carolina.
Greetings and welcome back to Fisher Wealth Management's Tips of the Week. Once again, I'm Rick Fisher and I'm the managing partner here at Fisher Wealth Management, where we help folks like you plan for a worry-free retirement. In a shocking development reminiscent of Brexit, Donald Trump, the Republican nominee, was elected the 45th President of the United States, Tuesday the 8th of November. In addition, Republicans maintain control over both houses of Congress. Trump's unexpected victory brings with it a great deal of policy uncertainty, given his lack of specificity during his presidential campaign. But judging by the tone of his campaign, one can surmise that foreign trade will likely be a major focus of the new administration. It's quite unlikely that the Trans-Pacific Partnership will be ratified against the presidential present backdrop. And NAFTA, the North American Free Trade Agreement, it could be renegotiated or even abandoned altogether. Uncertainty over immigration policy is likely in the near term, which that could also impact labor markets. On the campaign trail, President-elect Trump vowed to lower taxes and repeal the Medicare tax on investment income. He also promised to repeal the complicated alternative minimum tax, while also saying that he would tax carried interest as ordinary income. That's the tax the hedge fund managers use to not pay much. Corporate tax rates under his plan would be reduced to 15% from 35%, and repatriation of foreign profits would be taxed at a one-time rate of 10% if Trump's original plan is enacted. Who knows what actually happens once he gets to D.C., but for you to think about from an investment standpoint, sectors that may be advantaged under a presidential Trump include fossil fuels. He wants to promote energy, even coal. Calling for the leasing of federal land for energy exploration, or repealing some regulations on coal and reviving the Keystone Pipeline project. Pharmaceuticals could also do well. Price controls will be less of a concern for the industry than it would have been to have Hillary Clinton won the presidency. In the financial market, Trump has called for repealing or significantly revising strangling regulations of the Dodd-Frank bill. So burdens could really be reduced across the economy based on his campaign rhetoric. So the long and short of it is, if we see lower taxes and less regulation, Donald Trump, expect this to add fuel to the economy and the market. But if we see this protectionist version of Donald Trump, you could be a little wary. The main thing is to keep your head level and pay attention to the facts, not the noise. And understand that if you're not having these types of conversations with your advisor of choice, or you just want a second opinion on what you're doing, we welcome you to call us at Fisher Wealth Management. Remember, you're making plans for one retirement. We've made plans for thousands. Thanks again, and stay tuned.